Good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today's Thursday, June 21st, 2018. Happy first day of summer. My name is Dan Russo. I am the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. Sign up to receive Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. So U.S. equities were mostly higher in an uneventful day yesterday. The Russell 2000 and the NASDAQ were standouts on the upside. Treasuries were mostly weaker with some curve steepening. That sent the 10-year yield to 2.93%, kind of regaining that 2.9 level. We'll get to that a little bit later. The dollar was better against the yen, but little changed against the euro and sterling. Gold finished down 30 basis points, and oil was stronger. WTI up 1.2%. Breadth on the New York Stock Exchange was positive, 1.6 to 1. Metric on the NASDAQ was 1.8 to 1. REITs, consumer discretionary, and energy outperformed, while telecom, materials, and financials lagged. And as we get to the desk this morning, futures are down slightly, about 10 basis points, but off the worst levels of the morning. Asian markets were mostly lower overnight. China was down about 1.5%, though Japan posted solid gains. Europe lower as we speak, with Germany lagging. Treasuries are bid with some curve steepening. Dollar index is at an all-time, not an all-time high, but an 11-month high. Gold down 70 bips, and oil is off 1.5%. There are some signs OPEC and Russia may be able to reach consensus on a production boost. You've heard me talk about my thoughts on oil. I think we're heading to $60. So here's the S&P 500. We've held 2741. That is important. Now we'll see if we can get through 2800 on the upside. Support remains in that 2741 area, and then below that, 2710. Then we have 2658, which is the 200-day moving average, as well as prior highs and lows. Resistance does come into play at 2800. Those are the March highs. RSI is in bullish ranges. We've updated the trend line here, and you can see we've tested that and now started to move higher. That is encouraging. That gives me conviction that the market is going to resolve to the upside. We're not seeing bearish momentum when the market stalls out. These really are healthy stalls after advances, basically ever since the lows in April. And additionally, look at Chaikin money flow down here. As strong as it's been at any point over the past, call it 3 months, really. The only time it was stronger was back at the end of January market high. So this is encouraging. Money is flowing into the market, and investors are gaining exposure broadly to stocks through the SPX. You can see that here in the Chaikin money flow. That's an encouraging sign, another confirmatory data point that we are in fact going to resolve to the upside. So your market in a minute. Your market stabilizes, but trade tensions do persist. We're not out of the woods as far as that's concerned yet. The 10-year yield regained 2.9%. We're going to look at a chart of that, as well as a chart of the U.S. dollar via the UUP. It continues to climb. My industry in focus today is the medical devices group. It's a strong group in a strong sector that lines up well with our top-down approach to the markets. Futures do point to a lower open, as I said, and just as an aside, every Thursday for Chaikin Analytics subscribers, we look at breadth. Really nothing to talk about relative to last week, so I'm not going to include it here today. But breadth is still bullish. Kind of not as strong as it was last week as the market's faded from 2,800. But nothing to be concerned about either. Taking a look at the major indices via the Chaikin power bars, the Dow remains skewed to the bearish side. Heavy industrial exposure in the face of a trade war, not a good recipe for Dow stocks. S&P 500 added 18 basis points yesterday, although it did deteriorate a little bit in terms of the power bar. Currently 80 bullish or very bullish stocks for 104 bearish or very bearish stocks. NASDAQ remains leadership. 26 bullish or very bullish stocks, 12 bearish or very bearish stocks, and massive outperformance relative to the S&P 500 yesterday. And I mean, I'm almost getting tired of talking about it, but look at the outperformance yesterday. Small cap stocks up 82 basis points against the S&P 500, up 18 basis points, 625 bullish or very bullish stocks for only 217 bearish or very bearish stocks. This is where you want to skew from a strategic standpoint. We talk about a top-down approach. What's the market doing? It's consolidating within the context of a secular uptrend. Great. Within that, what's outperforming? Small caps. Great. That's your starting point. Now go find the strongest sectors and strongest industries within small caps, and then find the strongest stocks via Chaikin analytics. That is where you will find the winners to ride. As far as I'm concerned, that is our process. As we said, bonds tick down. Real estate had a decent day yesterday. According to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks. Major indexes are mixed. Here's your choppy trade. Stock of the day, and this is great. Micron reported last night stock was up, trading up 3% as I was driving to the office this morning. And it's interesting, this is an auto-generated stock of the day for PowerFeed subscribers, so it just happens to line up that the Micron is the stock of the day after they reported. It is a very bullish stock based on the power gauge rating. Closed at 58.95 yesterday, down 51 basis points, but the Micron has a very bullish rating because of attractive financial metrics and very strong earnings performance. The stock does have a little bit negative expert activity, however, but let's roll it all up. These four factors get rolled up to this very bullish power gauge rating. Strong trend, but the industry is weak. So, okay. Let's take a weight of the evidence approach here and run through our process. The ribbon at the bottom of the screen tells us that stock's been bullish or neutral through most of the past 12 months, currently on that very bullish rating. And importantly, the market is in agreement with our model. The stock has been outperforming the SPY since about the May timeframe. So the dynamic duo is in gear, market in agreement with our model. Tactically, does it make sense? Look, it's the day after an earnings day. There's going to be a lot of volatility, but strictly sticking to the process, the stock is oversold based on our overbought, oversold indicator, following a pullback to test the rising long-term trend line, has bullish money flow. Stock's up about 3%, so, maybe it's up about $1.50, $1.80. To take you through that 60 level. I'm comfortable owning Micron. If you're a day trader, maybe you don't want to pay the highs, that's fine. But as somebody who is a trend following trader who's looking to ride longer term trends, Micron is a stock that I want to own based on my process. Very bullish stock with a strong trend, oversold, outperforming the market, positive money flow, and they just beat and raised. That's a stock I want to own. If it's in the portfolio, keep it there. If it's not in the portfolio, if you are kind of a longer term, call it 6, 9, 12-month trend trader, this one looks compelling. From a sector standpoint, let's look at the movement of the major sectors over the last 5 days. Utilities, discretionary, and real estate are the top three players. I think the move in utilities and real estate has to do with the decline in yields. You know how I feel about that. However, it is starting to persist. I do need to kind of, I try not to remain dogmatic in my view. If, we see if yields break down and these two sectors start to break out, we can change our view very quickly. We'll monitor the power bars. We'll monitor how the sector is trading relative to the broader market. Materials, industrials remain the bottom two. Not a surprise given the trade tensions. Financials, a casualty of lower rates as well. I do think that's going to resume. However, again, not going to remain dogmatic in my view. The industry focus today, speaking of financials, is bank services, and this looks compelling. 25 bullish or very bullish stocks for 9 bearish or very bearish stocks over the past 6 months. They've outperformed the S&P 500 by 1.29%, but the positive power bars signal strength, future potential strength, and it's currently ranked number 8 out of 21 subsectors. It has moved up 2 slots over the past week. Some of the indicative names here, Bank of New York Mellon, we touched on that one a few days ago. Umpqua Holdings, ticker UMPQ. I get a lot of questions on this stock from Chaikin Analytics subscribers. I think it looks compelling. FNB Corp, another name with a very bullish Chaikin power gauge rating. Very bullish stocks in a strong industry, in a sector that has been strong until late. I think it's a compelling place to go looking for long ideas. However, keeping in mind that if rates continue to move lower, these stocks will be impacted in a negative way. Umpqua, ticker UMPQ, closed at 24.01, up 46 basis points yesterday. Has a very bullish Chaikin power gauge rating, has a strong trend in a strong industry. Running through now, the ribbon tells us where we've been. Stock's been bullish or neutral throughout the past 12 months. And the stock is really, except for a small blip at the end of January, the stock has been outperforming the SPY since last September. So the market is currently in agreement with the model, outperforming the market, but very bullish power gauge rating. Stock is approaching oversold levels as it pulls back to test and hold a rising long-term trend line. This is exactly the kind of stock that I like to use as a momentum trend-following trader. You want to be long Umpqua, UMPQ. Obviously, you want to manage risk however you do that, but oversold stock, very bullish rating, still outperforming the market, tests and holds support at a rising long-term trend line while Chaikin money flow remains bullish through the downturn. That is exactly what we are looking for entry points on the long side. Strong names in strong groups. UMPQ, I'm comfortable owning it here today. Trending names, yesterday's S&P 500 gainers, Fox A is they're in play, right? Disney and Comcast seems like they want to embark on a bidding war for some Fox A assets. That's going to drive trading there. WBA replacing GE in the Dow. That gets a 5% bid. Ansys, just a quality name in the software group. Technical software up 3%. Viacom, another name that could potentially be in play and a beneficiary of consolidation in the media space. Starbucks takes down guidance. They're going to be closing some stores. They get hit for 10%. This stock actually triggered 3 sell signals in Chaikin Analytics today. It already had a very bearish rating. So, the model works. Oracle down on earnings, HPE seeing some tech weakness. Brown-Forman, BF.B. We highlighted the food and beverage stocks a few weeks ago. We talked about it here as well. Brown-Forman, not a name you want to own. Very bearish power gauge rating, down over 3.5% yesterday. So as we said, 10-year yield regains 2.9%. Continues to consolidate. There's resistance at 2.95 to 3.0, support at 2.75. I'm open to a test. You've heard me say that. However, I think it would only be a test. The 200-day moving average is rising. We remain above the key breakout level at 2.6%. However, something I am keeping a close eye on is this potential shift in the RSI to bearish ranges. If that takes place with a break of 275, obviously I would have to change my view. But right now, I'm still of the view that rates are going to move higher. Should hurt real estate. That should hurt utilities. That should help the financials. Not changing my view yet, but not remaining dogmatic either. Going to let the facts play out. The U.S. dollar continues to advance. Here's the UUP, the Invesco U.S. dollar index bullish ETF. Breakout over the 24.75 level, came back to retest it down here, and now we're off to the races again. Above the 50 and 200-day moving averages, the RSI is strongly in bullish ranges, which confirms the price trend that we are seeing. And Chaikin money flow is moving back to bullish ranges as well. One of my themes and part of my thesis on small caps is that a stronger dollar helps small caps relative to large caps. You add in trade tensions, and that's another kicker to the small cap outperformance theme. And I have to tell you, I spent most of my morning looking through global charts, ETFs of global markets. And it's really becoming clear to me that the U.S., is the best market in the world. You're starting to see some breakdowns in emerging markets and other developed markets outside the U.S. I think that money is going to continue to flow here. That's dollar positive. That's small cap positive. Medical devices, it's a strong group in the healthcare sector, which has been outperforming for a while. The IHI medical device ETF is in a clear uptrend. The RSI is in bullish ranges and confirming the strong price trend. Chaikin money flow is solidly bullish, and the power bar for this group is 18-4 in favor of the bulls. ITGR, Integer, is a leading stock in that group. It's one you want to look at on the long side. So taking a look at the sector level via the power bars, we can see that healthcare, technology, and consumer discretionary are the 3 groups at the top of the list. Tech and healthcare are the only 2 with bullishly skewed power bars. Energy and consumer discretionary are evenly balanced here, as we can see. Real estate, bottom of the list. Materials, utilities, and industrials round out the bottom 4. We touched on industrials twice this week. You know how I feel there. These stocks are in trouble if we do in fact go into a trade war, and you can see how they've been performing over the past week and over the past month. We went through some names yesterday. So every day you can get powerful, profitable stock ideas and more as a PowerFeed subscriber. Get out there and enjoy the first day of summer. Have a great day, everybody.